Hello, good afternoon, everyone. This is Wilmer from the Philippines, Asia, and Australia. And good morning or good noon in United States and the west part of the world. So today, I will be discussing about trading volume, how to attack the market utilizing trading volume, and then I will talk about first how to use rate of effects on our meditation. As well, I'll be talking about some topic about on how to have a neutral state of mind while we are doing our trading. So this is a very important topic that we are going to discuss today. So good luck everyone, and I'll be starting right now. So um, before that I'll begin, I would like to remind everybody that trading is a high risk business. So do not trade with live account when you are not yet um, well trained or has not mastered yet your skills and your um, training with trading psychology, with your market analysis, and your risk management. So to begin with, I would like to start discussing about how to use rate of effects. Rate of effects is a type of meditation wherein you're going to use the genius of anybody, like if you want to master the skills of Carl Bugatti or Chris Capri or Mark Douglas, trading psychology, or Alexander Elder. So what you're going to do is you're going to use the heads of, for example, you want to master trading psychology with Gary Dayton, Dr. Gary Dayton. Then what you're going to do is you're going to swap heads with Gary Dayton, and then you have to experience and you have to act as if that you have all the intelligence and understanding of Gary Dayton when it comes to trading psychology. And then after that one, you're going to do like you're going to act as if, then take the action. So I know everybody knows how to use Reiko effects, but I would like to add that you're going to, if you'd like to master the trading psychology of like uh, Gary Dayton, then you're going to swap heads with him. Or just like for example, if you'd like to master the trading psychology of Alexander Elder, then you're going to swap heads with Alexander Elder or Mike Douglas. When it comes to market analysis, then you need also to swap heads with the mentors or known forex trader who are very skillful in their areas like Albrox, like Carl Bugatti, or Chris Capri, so that you will see the market like how they see the market. And then, if you'd like to master risk management, then Alexander has it a very well illustrated, risk management like the 2% rule and the 6% rule. Which 2% rule is your in all of your trading criteria, you are going to use 2% of your account. And in total, just like for example, if um, that's what we call as 2% rule. And just like for example, if you have a losses that is equivalent to 6% in the whole month, then you have to stop trading. then go back another month just to prevent yourself from any piranhas like being eaten nimble bit by bit. So to begin with trading psychology, I would like to uh, develop a trading psychology with a good state of mind and with a neutral state of mind. So most of us are struggling to, to to fight back with our emotions. We don't like to have the emotions of fears, losing out of money. Then we don't like to have the feelings of um, leaving money on the table or being wrong. So what happened is our focus is not already on market analysis. We are busy on fighting back our emotions. So in that way, we will not be very successful trader if we are like that. So what we're going to do is we are going to accept the fears we have because we are human beings. We are not computers, and all of the people who are trading on the markets, they have all that emotional experience in the market while they're trading. So what we're going to do is we have to be comfortable of being uncomfortable. Just like, for example, once we will enter in this portion of the chart, right? Right here, right here, right? So what will come to your mind if we are going to talk in this area, we will experience the we might be being wrong. So what will happen? We will close our trade right away. And then as market will go up in this area, our mind is keep busy of thinking, oh, it's it will be reversing, reversing, reversing. And we are afraid that the market will take our stop loss. So what will happen to us? We will be frozen, and it's not going to help our performance on the market while our thoughts are like that. So what we're going to do, I would like to inform you of biases, most blind spot of the trader. Just like, for example, we have the bias of number one is heuristic bias. Heuristic bias is everybody of us, we work on a shortcut. Even if we are going to calculate mileage from certain destination going to the certain destination, then what our tendency is we do like shortcut. Our probably we are approximately our estimate going to like from this destination going to that destination for 50 kilometers. We'll be spending for more or less um, 20 letters right away without any delivery thinking. So everything is a shortcut. Just like, for example, it's some kind of uh, automatic calculation from our brain. So what will happen in the market if we do like, for example, mm, we see a pattern. Okay. All right, right here. If we're going to analyze this one, because of our technicalities, we're going to look for the trend lines like that, and we will be putting like resistance here. Then in this location, you will be saying that this is support. But one. The latest information that we have is this one. So what will happen with us? This is daily time frame. For H4. The tendency of us, I see the pattern. This is, probably this is a large corrective structures. So how we are going to attack this one? You'll be thinking, I'll be attacking this at the low right here. Then you made an order automatically when you see this recent price. So your order is right here. Without any looking into any, angles in analyzing the market, you will be automatically um, put it green here, red here, and probably your SL or TP will be here. So, I see that. This is what we call as heuristic bias, shortcut. And let's try to dig it deeper. If you're shortcut analysis without looking to AMA, without looking to if you're using Ichimoku, if you're using like two type frames without looking to it, because you see the pattern, there is a descending channels. So probably this market will be going up. So let's go. If our heuristic approach is successful, and I'm going to move it forward. Oops. A little bit going okay. Oops. All right. It went back. So target TP. Our TP was almost hit. So it must be a good heuristic approach without any looking to anything, any analysis. Oh my. Again, the market went back to our entry point and move it forward. The market went back to our entry point. And finally, it hits our TP, right? So amazing. This is performing well, although I do not see yet how this market moves, but I earn a profit. But what my point is, we don't see any, consideration while we are analyzing the market. I'll just look at the descending pattern. What else that we see? This congestion zone right here, but I never see this. This is the portion that we enter the market. But that's a jackpot because although I use heuristic approach, but I made a profit. So I'll move on. Let's see what will happen if I hold it. Wow. How many pips? Wow, amazing. From here, hold it here, 640 pips. So, but this is a jackpot. This is not really, there is no really careful analysis of our mind right here. I just use the intuition. Using the intuition is, because I feel it, that it is, the market will be moving this way. So I make an order. But this is, luckily, I was able to um, get lucky that I was able to make a profit. So my point is, in trading psychology, is we are going to, have a deliberative thinking. First, we have the intuition that it is moving up. Then after that one, we need really to have a deliberative thinking. We have to consider everything. So I'm right that this is really a large corrective structure, and the market is moving up. But I never consider that before that it is a large corrective structure. It is an impulse. There's an impulsive move happening from here because I never considered that one. And I expect when there is a large corrective structure that will be happening right here, most probably the market will have an equal movement as big as this on the later part. So exactly how many pips? 700, 500. So this is an climax of the movement. So my point is I should have looked at the left side for the impulsive before, and I expect an impulsive on this location with which it happens. So this is what we call as I consider everything. Or if you know how to use fractal, then you're going to analyze the market with the fractals. See that? Here it's really pretty balanced area because you can see bear fractal was broken, then the market went up. Bear fractal was broken, market went up. So this is really a balanced structure, large corrective structure wherein we can attack this one, buy low, sell high. So when the market will reach here, sell, buy here, sell, buy here, sell. And then in this location, as the resistance that we have getting hit for many times, um, it gives way and the market went up right here. So to have deliberate thinking, you have also to consider EMA 20, right? Yeah, so we can see in 4 hours that it is really balanced market. EMA 20. Then after that one, so it becomes now more complicated. But this is how we analyze the market so that to make our analysis more uh, become more high probable and having a positive expectancy. So I'm going to remove my EMA. EMA. And then I'm going to replace it with Ichimoku. So if you know how to use Ichimoku, you can also use that in your deliberative thinking analysis. So let's try to mark Ichimoku right over here. Yeah, you can see it here. It's really balanced structure. Market went down, the market went up, the market went down, market went up, the market went down, the market went up. And this is the breakout point right here with Ichimoku. Mm, there is a market, the Tenkan and the Kijun was pointing upward, Chiku is pointing upward. So when the Tenkan and Kijun are pointing upward, meaning to say it's a strong momentum. So they're having an angle like this. Look at the cloud. They are pointing as well. They are all parallel. So Chiku line, the Kijun, the Tenkan, Kijun, this span A, span B are pointing upward. So we are now applying deliberative thinking because we look at the market for uh, many angles. So in this formation, what will happen is we might be fighting back with our, our emotion. So that's why we need really to have a journaling of our emotions. So the journaling that we need is first is we're going to have like monitor on our thoughts while we are trading. So the number one that we're going to monitor is, just give me a moment, trading psychology. Yeah. So we are going to monitor, we are going to have like a journaling. Um, I'm going to write on the screen. Number one that we are going to question, to take note, this is the format of your journal, is how you act. How you act. So I'm going to put like mm, all bars here. Then you're going to write here, I acted like mm, I entered a trade. Enter a trade and plan. And then next, what your mind tells you while you enter the next thing that you're going to write is what your mind tells you. So we're going to monitor really this time. All of this. You need a logbook or a notebook wherein you're going to question yourself about this one. Example for this, I entered a trade and plan. So what is in your mind? Mm, I enter a trade and plan. So in my mind is, you have to take note. I see that there is like, for example, changes on market structure based on fractals or any reasons that you will have. So this is one thing. Then the next thing that you're going to note is emotion that you experience. So you're going to put it here. I having like FOMO. Then FOMO. Then you are going to take note that is it well managed? Mm, or you're going to put right here like, mm, did you embrace it? Embrace your fears? Or hello, Mohab. Just give me a moment. I'm accepting participants. Mohab is entering my webinar right now. So I just have started. And hello, Mohab. Welcome. I started already and I covered already with trading psychology. With I I make here. I'm going to share my screen. Actually, I was not able to share my
Hello.
screen. Can you hear me, Mohab?
Hello.
Yeah. Let me. Can you hear me now? Mine, what happened?
Hello.
Hello, Mohab.
Yes.
Can you hear me now?
Yeah, I can hear you now.
Very good. So, actually, I started already. So, I'm already in how to journal your emotion. So, I forgot to share my screen, but it is well recorded. So, let me share my screen. Okay. Okay. Did you see my screen right now? Can you see my screen? All right. So I have to continue. Just interrupt me, Mohab, if you have questions. So I have to continue my. I'm actually in the portion of this one. How you act, enter the trade of unplanned. So this is how we journal our emotion, or in our trading psychology. How you act, what is your mind, what your mind's what your mind tells, and emotions. So actually, I was in this part. So I did a heuristic approach right here, entering here while ago. I'm going to remove it right there. So actually, what happened, Mohab, is I just looked to this market like that while ago, and look at this like there is a large corrective structure, and I enter a trade right here. My SL right, my stop loss is here, and my take profit is here. I emphasize with, you know, heuristic approach without looking at any angles, by just, having a shortcut on entering the market, which is not good in trading. But I didn't like this. I don't know the future data, so I just analyze the market like that. But I have like a little bit analysis, like descending channels. I can see here like this, and then there is like, what is that? Yeah, this is it looks like a wedge, but it's it's actually a descending channels. So I entered here, and as the market moves upward, I hold the trade, moves upward, and the TP was hit. This is a lucky heuristic approach, a shortcut that I was able to enter the market without looking at all angles. So I emphasize that in trading psychology, we have like heuristic approach, bias, that's what we call. This is usually what will happen when we have a shortcut. We tend to shortcut our analysis, and it's not good for trading. So we should have intuition, and after intuition, if we sense like, oh, this there is a descending triangle, we have to look at the angle in many different views. So you're going to apply deliberative thinking. So you're going to apply like Ichimoku, AMA. If we're going to look at the AMA, yeah, it is carried upward, and we will be looking at the impulsive and corrective structure. It's right here, and the other one is right here. This is an impulsive corrective structure. And actually, our TP was hit. But this is not the right way to analyze the market, because I only look at this views of the market. I'm not looking at everything. I even not move from one TF to another TF to look at the trend. So the next topic that I'll be talking about is the um, we call as representative bias. Representative bias is for we look the market in the present. What what happened recently, or we can call this as recency effect. So what is the latest information that we have? We tend to look the market the same, and we will be looking for patterns that maybe the market will move like this because it happens in the past. But it's a pretty like subjective analysis of the market. So we have really to to prevent those biases that we have. The we call as the representative bias. And the worst thing biases that we have is the hindsight bias. That this is the time that we have overconfidence of the market, and uh, you will say to yourself, I know where the market will be going, and I'm pretty sure that the market will be going on this to this direction, and you become more arrogant. So that's now the problem of having all the biases in trading psychology. So that could be detrimental. That's why we need really a neutral state of mind. So to have a neutral state of mind is we have to always be in neutral state. So meaning to say, we should not be overexcited. We will not be unexcited. In the market, especially if we have a lot of winnings, what will happen in our mind, we will be addicted of our winnings, and we will become more, confidence. We will become more arrogant to the market. I'm doing good, and that's the time that your analysis will become not objective. You are blinded already. So it's really not good to have those biases that in the market. So to end up with the trading psychology is the best thing is really fear, emotions, fear of missing out, fear of losing money, fear of being wrong, fear of leaving money on the table. Um, which is the most painful emotional pain if we leave on the money on the table and it will be taken out. So we have to monitor the our behavior and our reaction to the market after we experience all those all those uh, emotional pains that we have. So uh, we have to do another journaling for that for the last part before I go to the trading volume. We will be having like number one that you're going to do in the journaling that you have is event or situation that triggers the emotions. Mhm. Events or situation that triggers emotions. So this is in our journaling. And then the next for this is mm, have thoughts. Have thoughts that ignite or amplify strong emotions. Then the next is mm, how you feel. How you feel about it. How you feel. And then the next one is action you take and results and consequences of your actions. Results and consequences of your actions. So I'm going to, so this is the way that we're going to journal our thoughts and emotion. The purpose for this, so that our emotional quotient will be improved. The higher our emotional quotient, the stronger it is, the more we'll be performing well in the market. So this is how we are going to do journaling of our emotions on the market. So events or situation that triggers your emotions. So what events? Number one, like there is a big news is in a novice. Oh, big news is a, they call that as the catalyst of the strong moves. So they will be excited. So news and have thoughts that ignite or amplify strong emotions. You'll be thinking big profits. How you feel about it? Mm, when there is a news, you have many fears. Fear of whipsaw. Actions you take. Mm, you let go of your emotions. And results. Your account was whipsaw. I mean, your entry was whipsaw and loss. So this is the consequences. So this is just an example because there are a lot of um, events or situation that triggers your emotions on the market. So the best thing is we have really to have an IQ rather than having if you have a higher EQ, then your IQ will follow, right? So that's why it's really very important that all the time we will not we'll be in the neutral state of mind in equilibrium. We are not excited and we are not demotivated. So always in these, because if we are always in the neutral state of mind, our analysis of the markets are all objectives. So I'm going to end up our trading psychology. I hope that you get something from the trading psychology discussions that I have. Then I'll be proceeding to the volume. So volume is, you will know where the big players will come in the market. So I will. So that's how important volume is. So just like for example, in this location, you can see here, highest volume is right here. So what bar? That one. So if this is the bar, we're going to mark this as our anchor. You look to the left and to the right using the anchor. You can see it's a perfect really support and resistance. Right here, the market went down. Uh, market went down. Market went down. Market went down. Right here, we can see, although it's not perfect touches, but right up to here, it's all pretty touches. Even right here and right here. And this is the anchor that these are the anchor, the zone, the anchor zone, as what we call. So in this location, if you see the anchor, we can mark this as right here, zone, so, resistance zone, and as well right here, probably this is the best zone. Yeah. So if you're going to attack this one, because that zone, after this high volume will happen, you go to the left. What will happen? You will see decrease of volume. If you see this decrease of volume, it's really good to attack the market at this location. Attack the market at this location. Stop loss right over here for how many pips? 68 pips. This is H4. Or you can bring your stop loss right here. Reduce stop loss because this is low volume in this location. After low volume, participants will increase. And what happened after the volume increase?
It's not enough of
The
a
market
interruption in a bear trend to make me think a
shorted.
bear trend.
So the market shorted. So you can enter right here and up to here.
I think the bear trend is going to continue down. So anytime there's a trading range, and I think the trend is going to continue, I call that trading range a pullback. Make the pullback down, and within the pull down, we'll call it a drop. I talked earlier about definitions of trends and legs and pullbacks and swings. This to me is a bull trend. Here's a 50% pullback, but it has a lot of bear bars, and the market probably went noisy.
All right. So this is what happened after entering right here with the low volume. It's very safe because if we enter with low volume, it is low risk. After that one, the volume will increase. You can see the volume has increased right here. And you can take profit when the volume reaches right here because this is another anchor, which is, let me look at this. This one, yeah, pretty close right here. But for me, you can take profit, and this is congestion right here. So this is a good take profit area. So that's how low volume perfectly will be helping us in our trade. But we have to look for, the patterns and the candlestick pattern as well as the patterns. We call a triangle. But right here, what patterns that we see? If I go down to one, is that one? Yeah, yeah, we can see it here, a triangle, right? Triangle. We can see here a triangle like that. So we can attack this one up to here. So the next thing is I will go to, this is how the highest volume attack and the lowest volume attack, and marking the anchor. So in 4 hours, if we go back to 4 hours, go back right here and erase everything. There is another volume that a high increase of volume right here, right? So we will still keep our line here in the zone, that one and that one. But as you can see it here, the zone that we drawn, it was respected again. So it's a perfect resistance. So actually we can attack right here. I'm just looking at the volume and with the formation of the, and if you're going to analyze this one, this is impulsive and this is corrective, right? Impulsive. Or we can call this as N wave. Move N wave. Move N wave. All right. N wave. Or we can apply our measure moves, right? We can, how many thrusts? 1, 2, 3, 4, 5, 6. Or just straight approximation. Move right here, 181. So most probably market will, yeah, 181. It moves more than 181. So the mark zone, the anchor zone that we mark, it acts as support and resistance, right? Right here. So if we are going to attack in this location, there is another small zone that we can mark right here. One, okay. Can try to mark that. This is the area wherein there is a highest volume. Come on. Yeah, highest volume, but it's not the highest volume, but an area where they're in, where you can see a lot of participants in the market. So if you're going to look at this, marking this area and looking at the area wherein there is a highest volume, you can see that perfectly the support and resistance is perfectly aligned. Right over here, perfectly aligned up to here, up to here. So remembering the anchor zone with the highest volume, and I mark with the lowest volume, the a little bit lower volume. You can mark this as a zone. So when the market will attempt to, you know, uh, break this area, you can attack, right? In this area, if the market will attempt to break on this area, you can attack. But let's look for the bar that has low activity. Low activity bar, right here, right here. Yeah. So if you're going to mark this bar, so this is the bar that, okay, so you can attack this one going up here for a small pips, for 30 pips, as the market will go up. And then as this area has a higher volume again, higher volume. Yeah, you can see it here, one and the one. And after the one, higher volume, low volume. Wow, so this is the pretty bar that we are going to attack. Very safe. Even we put our stop loss right here, just above. How many pips? 24 pips. Low risk entry. The market went up. If you can see here, the market went up, and take profit when the volume will increase. When it becomes right here, it will arrive right in that location. So what happened? Let's look at that. Okay. No, that's not the area that I'm looking to. Low volume. Yeah, this area. And high volume. You can see here, best take profit area. And this one. So that's how volume works in our analysis. When the volumes, just like for example, it's really nice to attack the market with low volume because you can see there that the bulls are dying, right? The bulls are dying. It tries to went up, it's a pullback, went down, went up, and the volume is low. Nice to attack. And your stop loss will be here as the market will go down. All right. That's the conservative stop loss. Entry right here. And measure move or bear trust. Equivalent or trust projection price. We call that as price projection trust. So if we're going to measure it here, so this is really the area wherein we need to take profit. And if we're going to look at the left, we can see here congestion in the past. So usually on this area, it's really a nice take profit area if we attack right here. So entry here, stop loss here. This is just based on volume. It cannot work alone um, with without the without the analysis of the N wave with other analysis that we have. So And we can see it here that the market really has moved down, pulled back, and moved down to in wave. So it will be really integrated with other analysis. So if I'm going to put like EMA in my analysis, EMA, EMA, yeah, you can see that the market bias is down. We can look as well, so we have to consider as well the trend line. If we can see a trend line right here, I'm going to erase like the volume that we have because it becomes cluttered right now because we have a lot of resistance. If we are going to do trend lines right here, the bias at this point is upward or long bias, right? That's a trend line. So in this location, the bias has changed. So incorporated with our volume, this is the area, look, this is the location, a good area to enter a trade. And incorporating with our volume attack, this is the area really wherein we have really nice entry for entering a trade. And we can see here patterns of 1, 2, 3. It's a ascending channel. So at ascending channels is a good signals for shorting, right? And especially we have a resistance right here. So it become now more confluence. So if we're going to put like as a whole H1, low 1, then low 2, low 3. This is a good entry location, right? As well with the volume that we mark, highest volume. So the volume will help us locate the most perfect support and resistance because the volumes that we have right before analysis is, come on, okay, maybe I have to remove some of my, okay, so that, all right. Close all tabs because my computer is lagging a little bit.
I
Remove
can see
this.
everything clearly.
You can see everything clear?
Yeah, I'm not lagging.
Okay. So if we're going to look at this, incorporating with volume, it's a perfect support and resistance, right? So going to this location, perfectly. So with the anchor zone plus the setup of low 1, low 2, low 3, it becomes now a very developtive analysis that we are going really to enter on this location. Plus,
That's correct. We have a lot of confluence.
yeah, it's very confluence in this area. And plus, in this location, there is congestion. If we're going to mark congestion right here, okay, with the volumes location, this is the perfect location. So if we are going to extend this hole, because this is a congestion, from here going to this area, you can see that the lower portion of the congestion was broken. So in this location, based on the volume attack that we have, it is supported by our price action analysis. You can see it here. You can see it here perfectly. It test, went back, two tests, went back according to Albrook's. When the market will test it twice or thrice and it cannot broke, it will fail. It's good entry. So if you are going to analyze it with the volumes in this location, one, second attempt, two. But you can see here a lot of one, two, three. We can see it here as double top, right? But it becomes a head and shoulder. perfectly. So we can see a lot of patterns in this location, a lot of patterns. So, and as the market went down, we can mark another highest volume right here. High volume. Yeah, this one and this one. Just all right. Okay. So another opportunity right here as the market tried to break that one. And in a lower time frame, I know for sure this is like that. Another confluence area. This is low one, low two, low three. Another selling opportunity. Low one, low two, low three. So L1, L2, and L3. L3. So we can see it here that it's really pretty safe to attack with the anchor zone. You can make the zone as your stop loss here. Go back. And we are analyzing it as a whole with our derivative analysis because we can see this is an ascending pattern, right? Ascending channels. So whenever there's an ascending channels, it's a good shorting opportunity. So if we're going to use Ichimoku with our analysis, let's try what does Ichimoku will tell us in this location. Ichimoku is, yeah, Ichimoku is telling us this is a selling location, right? We have resistance here, and in this location, the span B become a resistance up to here. So if you can enter here, you can put right away your Ichimoku, and you can follow it by moving your SL to Kijun, enter here, or somewhere here or here, follow in here. As the market went down, Kijun, follow it here. As the market will went down, move your SL right here. So this is a trailing, trailing stop, break-even approach in attacking the market. How many pips from there? It's 169 pips if you follow the Kijun. But if we follow price action in taking our profits, I'm going to remove all the objects. If we follow price action, probably it will happen like this. This is a signal bar, right? Sell stop here. Sell stop here. As the market went down and move up here because it tried to test our, the breakout point with this location as well. So this become a lower high. So you can move your first SL is right here. As the market went down, move your SL right here. Hold it. And then when there is another impulsive move, you can bring your SL right here. All right. And another impulsive move in this location, you can see here, another impulsive move, lower high, SL right here. And if we're going to analyze this as a whole, this is a wedge pattern, right? It's some kind of descending channels, but if we're going to do it like that, yeah, it's a descending pattern. So this location is a good take profit location. This is a pretty advanced analysis, taking profit with the signals not having the, the the TP. We are moving our stop or SL following the market as it moves down. Because if we are going to analyze with the fractals analysis, you can see it here. Bull fractal was not violated. And right here, bear fractals, bell fractals is violated. 1, 2, 3. And then here, there was a change of the pressure. You can see it here because this is another area for good location for entry. Right, and we will mark right here. Where's the volume with high volume? I can mark it this as well. High volume. This is the one with high volume. This one is with high volume. High volume but small bar. Pretty good support and resistance, right? So we can attack this area because market has a memory. All the traders has a memory that a support and resistance. If you look to the left, it's really a good support and resistance area. So it's good buying pressure right here. If we're going to, because trading has, we will consider everything. We need derivative tanking. So probably we'll be considering in this location with Williams. A lot of analysis. This is now what we're doing is deliberative thinking. So if we're going to put like Williams, what does Williams will tell us? Yeah, good buying opportunity right here. Can see that one? Look at here. The angle is pointing up. In Williams, in 4 hours, it's a good buying opportunity. As well, supported by our support zone, which is right here. And you will be entering on the next area where the market activity, right here. Very safe to enter right here. Long entry. And our Williams is pointing upward. So, and let me check on Ichimoku. What does Ichimoku tells us in that location? Yeah, Ichimoku is far away from Kijun. So when it is far away from Kijun, Ichimoku will revert back, right? So this is also a good entry for buying. Based on volumes, you can see it here that volumes really works in many ways. It's really good for marking support and resistance. And you can utilize this volumes again. See what happened after the market moves to that location. See that one? When it was touched once again, supported with the downward channel, and then you can make it here a support and resistance. Plus, you can see strong moves, impulsive moves, and so this is an N wave. You can see that one. This is another opportunity. And if we are going to look at here, at this location, low volume, attack it here. You can attack here, low volume. As the market progresses, you can see right here. As the volume increase, you can take your profit. Very nice to take profit. So we will move our anchor, another portion right here. Yeah. So we can mark this as a new anchor as well. See that? It become a perfect zone. 1, 2. You can see there are many setup like inside bar, doji, a hammer, spinning, bar, plus engulfing bar. This a dragonfly. You can re-enter here. You can see that one. And as the market forms right here, you can make this anchor as your new strategy to attract the market. But we'll look for lowest, yeah, volume. So it's safe right here, or because this is a trend bar, you have to wait. It becomes like, this a doji already, but it ends up like a strong bear bull bar. So close as this, if you apply attacking at the zone, you can attack right here, or to be certain, you can put your SL in this location, entry here, and take profit here. And as the market went up, you can see here congestions. Congestion. It broke up the congestions, so this is another entry. But looking at our erase, I'm going to erase this is how really amazing volume is right here with highest volume. You can see that with highest volume. This is the anchor. You can make many attacks using the volumes, right? As the market went up, then in this location, let's look for another highest volume. This bar. You can see it is respected. When it was broken up, it is respected. And not only that, before this happened with a breakout right here, most probably this is it has an EMA carry. Let me check the one EMA carry 20. Yeah, not really good, but you can see here the bias is still long from here. So actually, with the volumes that we have, when the market will touch this location, it's an early entry for going long. So I think I have covered most of our trading volume. It's so simple, but if you're going to apply it, it's very effective. And let me check what are the things that I miss. Mhm. What are the things that I miss? All right. Okay. So I think, Mohib, I covered everything. And before I will end, I will show how I attack the market lately, but actually it's very close to the resistance right here. I attack it here for the reason that it has a low volume right here. So I attack that one. Then I look right here as a target. Then I reattack the market right here because looking that one, it has a low volume in 1 hour. Low volume in 1 hour. Where is it? Yeah, yes, here I reattack the market right here. And I take profit right here. So actually, I attack it with Ichimoku. Come on, Ichimoku. Yeah, in 4 hours. Become so cluttered. Yeah, you can see that this area is a Kijin in 4 hours. So my attack was here. I look at 1 hour with the low volume in 1 hour, and I took profit exactly in this location because if you're going to look to draw a trend line right here, removing my Ichimoku, the bias is still long. So that's how I drew it. The bias is still long. So it's actually this is a good entry location to attack the market right here, but I was never to re-enter. And as you can see it here, the market struggled on as it went down. Look at on you look at 1 hour as well. Go to 15 minutes. Look at what happened. So in 15 minutes, you can certainly make a channel here, right? So this is a good area for long area. But this at this time around, I went to mall, so I was not able to re-enter. But my stop loss is exactly in this location. It's a fixed TP. So how many pips I gain from there? Only 36. How if I attack from here, going up here, it is it would be like 45 and 80 pips. So the thing is, if you're going to play around in this location, the most important thing is trading psychology. We don't need to fight back with our emotions. We have to embrace it, and we will be comfortable of having it, and we'll be finding solutions on how to find a solution to be neutral whenever you will have fear of losing money, fear of missing out, and fear of leaving money on the table and being wrong. So if you're always in neutral state of your mind, you can attack the market even in this location, because actually the bias in this movement is upward. Even if you're going to put exponential average, 20 moving average, yeah, it was not broken even in 1 hour, 4 hours. You can see that the bias is still long, because this moving average acts as our bias. Whenever it is below the moving average, it's a downward bias. It's a bear bias. But uh, the one that we can look into is the trend lines as well. So trend line is very important as well. So that's why it's really important that to be successful as a trader, we have to have a very highly advance or ability in our trading skills, because most of the traders, they are very busy in improving with their technical abilities, with their market analysis, how with the patterns. But when they trade on the actual or live account, their emotion was hijacked, and that's the time that they will be angry on the market. They are being deceived. Oh, the market is doing something against us. The big players or whatever, the broker hunted our stop loss. But because they're not so mindful with the trading volume, they enter on a high risk area or location. So their TP, their SL was taken out. And after that one, because they lost on this side, what happened with the trading psychology? They want to revenge the market. As they want to revenge the market, they will enter the market recklessly, without objection, with remorse and revenge in their heart. What happened? Their neutral state of mind was gone, and they are not in equilibrium, and they are risking their accounts. So I would like to repeat that to be successful in trading, we need to have a solid trading psychology. We need to learn the trading psychology of I can provide you all the orders like Gary Dayton, like Alexander Elders, and trading psychology of Mike Douglas. Those are the legend trading psychologists, because why I like them, because they are all the two, Gary Dayton and Alexander Elder, are psychiatrists, so they can understand better psychology on the market, and it is well explained on on Alexander Elder, the behavior of the market and the trading psychology. As there is also a good so my recommendation to everybody is we invest time to study trading psychology. In that way, if our trading psychology become pretty solid, our technical abilities will follow. So, Moheb, probably I'll be ending my webinar today, and I would like to thank you for attending my webinar. So, I have to say goodbye to everybody. I hope you can get, although this is a pretty simple explanation of trading at volume, and I'm just giving you that we can utilize the trading volume in our trading. So I have to say goodbye, and I hope you will get a nuggets of or insight from the webinar that I'll be doing every Sunday, and can help everybody to be successful in doing in trading forex. So don't forget to do our our rate of effects meditations using the heads and brains of Alexander Elder to improve our trading psychology, Gary Dayton, and Mike Douglas. So happy Sunday, everyone, and salam alaikum to Muheb. Bye for now. And actually, I'm not feeling well today, but because I have a quick commitment to have a Sunday webinar, so I do my best to have it today. So thank you very much, and probably on the next webinar, I'll be talking about all the the H1, H2 that I see on the market, so that our learning or our wiring of our brain will be pretty, we will have a good neural wiring on our brain, so that we can practice it. We can look on the chart, looking for the ascending channels, looking for the small one and the big one. The bigger the patterns, the bigger the movements that will happen. So that's usually what, for example, there is a big head and shoulders, and big, descending patterns, then the opposite of that will be a big movement too, especially when the bias will change. So good day, everyone, and I hope that everyone will be successful in trading forex. Bye for now. Okay.